Ladies and gentlemen, good day and welcome to Mech Projects Limited Q1 FY'25 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Natasha Jain from Nirmal Bang Equities. Thank you, and over to you, ma'am.
Thank you, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes all of you to the first quarter FY'25 earnings conference call for Mech Projects Limited. From the management today, we have Mr. S.K. Ramaiah, Director, Business Development, Mr. Rohit Sajja, President, Business Development and Operations, and Mr. N. Aravind, Chief Financial Officer. I now hand over the call to the management for their opening remarks, post which we shall open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Natasha Ji. This is N. Aravind, CFO of Mech Projects Limited. I have with me Mr. S.K. Ramaiah, Director, Business Development, and Mr. Rohit, President, BD and Operations. I welcome you all to the earnings call Q1 FY'25. The reported total income for Q1 financial year FY'25 is rupees 1,017 crore against 871 crore in Q1 FY'24, an increase of 16% year-on-year. EBITDA is around 123 crore as against 105 crore, a growth of 17%, and PAT is 60 crore, which has grown by 18% compared to 51 crore in Q1 FY'24. So improvement is as seen in overall margin profile. EBITDA margin has gone up from 12% in Q1 FY'24 to 12.1% in Q1 FY'25. Revenue mix for the Q1 FY'25 is as follows. Mechanical business has contributed 102 crore against 139 crore in Q1 FY'24, showing a decline of 36% year-on-year. Civil business including railway, mining, water distribution contributed 557 crore against 493 crore in Q1 FY'24, an increase of 13% year-on-year. O&M revenue are 341 crore against 224 crore in corresponding period last year, registered growth of 52%, and electrical business 8 crore against 9 crore during previous period. Other income 9 crore against 6 crore in Q4 of FY'23. During the Q1 of FY'25, the distribution between domestic business and international business is 94% and 6% respectively. Contributions from power sector remained at 54%. Non-power contributed 46%. So net current days, excluding cash and cash equivalents, have increased from 112 days in FY'24 to 142 days in Q1 FY'25, mainly due to elections, and there were delays in realization of receivables and also delays in certification of the works resulted in increase in the current assets of the company. The debt levels are in control. As on 30th June 24, the gross debt is around 581 crore and the net debt stands at 40 crore. The debt equity ratio as on 30th June 24 stands at 0.31 times. Order book status: so far in this financial year, the company has secured orders worth of 1746 crore. The order backlog as of 12th August 24 is around 57,793 crore. If we exclude the two MDOs, the unexecuted order book stands at 18,115 crore. So expectations for this current year FY'25, the overall business environment seems to have improved post-elections, and the execution cycle is picking up. Despite a little slower at Q1, we are confident of achieving revenue growth in the range of 25 to 30% for FY'25. Margins are expected to remain stable, and further improvement is expected as MDO business ramps up. Once the MDO revenue peak during FY'26 and 27, the margin profile will see a marked increase. On the order book side, we have set a target of 11,000 crore for the financial year 24-25. Our focus will continue to be on the industrial plant, operation and maintenance, railways and water. Going forward, O&M and MDO business will provide stability in revenues as well as margins in significant way. Now I request Mr. Ramaya to update on the developments, sir.
Yeah. Thank you, Arvind. Thank you, Rohit. And good afternoon to everybody. Arvind has given the basic numbers and also the improvements in the margins and all. As far as the business outlook is concerned, first quarter we had a order booking of 1,039 crores, and looking into the elections which had happened and all, there were some of the tenders which got postponed and all, and now it is taking traction. And the basic the backlog of the orders at the end of the last quarter was 17,302 crores. That is a marginal improvement from 17,408 crores overall. And with the mechanical backlog of order going up by 2.1% from 6,422 crores to 6,558 crores. Civil order backlog has going up by 2.3% from 7,814 crores to 7,995 crores. O&M, there is a dip about 12% from 2,197 crores to 1,933 crores, and the electrical is more or less stable at the same thing. But the positive thing is that the overall order booking is improving, particularly O&M is taking a lot of traction, and in the second quarter we were able to increase the overall order booking to say up to 550 crores. With a lot of new projects coming on O&M in the international market, domestic market, and also the new projects which are getting commissioned, and some of the contracts also getting extended. Now, if you look at the overall outlook of the company's business outlook for the year, what Arvind had given a number of 11,000 crores with the present order booking of 1,746 crores. We should be still trying on traction to achieve these goals because the opportunity size has gone up substantially on various opportunities in the power sector, non-power sector, and the O&M, railways, road construction, and then industry project sector, etc. There is a continuous tracking of many of the opportunities. We are tracking about 75,000 crores of opportunities, and there are hardcore opportunities of nearly 20-25,000 crores. And the lead is taken by the power sector, O&M and all. And as we know, the BHL has been flooded with a lot of orders, and with 88,000 crores of order booking in the last more than a year, they are having a substantial order of booking. And what is important is that in the power sector, there are three developments which I would like to update. One is the order booking which BHL has taken out 88,000 crores for about 13,840 megawatts. That will going to play a significant role in our order booking in the current and next year. The second aspect is that, Adani is developing three major projects, either Raipur and in UP also, apart from Mahan. Therefore, about 4,000 and odd megawatts they are developing themselves, of course, with the supply orders placed on BHL, and some of the orders we are going to take on that. And the third development is that, as we know, the present installed capacity of coal-based power is 218 gigawatts. And government is determined to ramp it up to 300 gigawatts by end of this decade. That is mainly to see the grid stability, which I think we have explained many times earlier. And now they are determined to see that the backlog in the order booking is tracked fast, not only with many of the ongoing development projects, but also some of the pitted stations also they are planning it. So in that direction, NTPC is planning to add about 26,000 megawatts new. In that about 9,000 megawatts they are already implementing it. Balance about 17,000 megawatts they have to place the order in two stages. Stage one, they already taken up the work, about 8,600 megawatts. Another 8,600 megawatt tenders have to be upgraded and all, and they have to issue the tenders and all. Therefore, NTPC, BHL, Adani, this is what we expect in the power sector, which will play a role in the coming years. And the total opportunity size can be anywhere between 20 to 25,000 crores, looking into the various aspects of the civil, structural, mechanical, ETC business and all. And whatever plants are getting commissioned, we have seen the flow of the orders in the O&M segment also. That is going to happen. For example, what has happened in this one, UP for the NLC project, and then there are other projects also which have come. And recently, Hindustan Zinc has given one more order for the other plant, another 210 crores. And in fact, So far, we have in the O&M side, it's about 550 crores of orders have been arrived at as on date, and there is an opportunity of 1,500 to 2,000 crores in the which has been tracking hardcore opportunities also. Now, apart from that, the non-power segment is a big business. In the particular railways, we are having 2,500 crores of jobs. We are executing in about 14 jobs, including a major job of in Bangalore DMRCL, that is railway maintenance shops, and then many other railway jobs which are going pretty well. And then Adani jobs are also going on, and some traction is taking place on the FGD jobs also now in Udupi and then in Andhra also. That should give some additional revenue for the current year. Now coming back to the other opportunities are there. For example, there is going to be huge investments in the steel sector, non-power sector, minerals and metals, NMDC. NMDC is planning 60,000 crores of investment, and many of the projects they should call the tenders shortly. And then Steel Authority of India is planning an expansion in the ISCO Burnpur plant, 4.5 million tons, with an investment of 30,000 crores. And then, Dastur & Company is a consultant, and many packages should come. We have to look for the partners there. And then JSPL is coming with a plant of 5 million tons in Sukum, Vermont, with an investment of 27,500 crores. And we are having an ongoing relationship and doing some of their jobs in JSPL Angul also. Recently, we have taken a job of 116 crores there. And looking at all these things, and apart from the railways, road projects, as we said, these opportunities should mature enough. And now, after the elections, I think there will be more push for the expediting orders by the main players, the developers like NTPC, and then railways, and then Adani. They have to also expedite the jobs because they have got a plan to develop their installed base from 15,500 megawatt to 31,000 megawatts in the next 7-8 years. The first phase they are already taken up. Second phase also they will take up. And one more development can be there. The organization is taking some initiative, and then organization strength has been strengthened in terms of BOP packaging. And at present we are tracking about 4,000 plus megawatts of opportunities. Our teams are discussing with the many players and all, because there is an urgency from the developers and owners also to see how to package it better in such a way that more players come into the play for the balance of plant packages apart from the main plant. Because BHEL is the sole player in the main plant, and that they will continue to get the orders. But there is an thinking going on in NTPC and many of the private developers also to see that how the packaging can be done. That is where we are looking at the opportunities. That opportunity size can be more than maybe 15 to 20,000 crores. Therefore, looking at all these things, perhaps the flow of orders would improve in the second and third quarter. And one more development is there. Optical fiber cable, which is a part of the BharatNet connectivity to every village with an investment of 3.6 lakh crore. That is taking full shape. And then our business development group, Mr. Rohit, is taking a lot of initiative on that. And then, we have made up some tie-up with the parties and looking at some of the important opportunities in Madhya Pradesh, Maharashtra and other places. And then, that should take some shape. That will be a substantially big opportunity. And as the development takes place, we will keep you informed on that. Therefore, that is where the thing and the international operations, one of the key development has been that Nigeria, the O&M job of 2 years O&M job has been further extended for another 2 years. That is an important add-on to the O&M kitty for our rulers. And this will continue. Our initiative on O&M will continue. The ETC business will continue with the more order backlog for BHEL. And the expected NTPC order flow, which should be expedited, as I told you, about under 17,000 megawatts, and then ongoing the jobs of Adani, and then railway jobs, and then of course infrastructure jobs are also, we are tracking many of these projects. In that way, we are still very optimistic on targets for this year. Thank you. Then our Rohit, President VD, will give an update on the other developments also, including the MDO Honda.
Thank you, Ramaya sir. Good evening, everyone. So I'll conclude with a few highlights of Q1 of 2025. before leaving the floor for question and answer. And also, I would like to touch upon both MDO projects, which I'm closely monitoring, and a few updates on the business development perspective and overseas business as well. So we have some good updates in terms of the MDO. We have gotten clearance from Jharkhand government to take possession of 585 hectares of forest land. There was a delay of a month, but we were able to get it before the state elections could be announced sometime in the months of November or December. So which is a good update. So I think we expect to break ground earlier. We anticipated to break ground in July, first 2 weeks of July, but now it's getting pushed by 2 months. So by end of September, beginning of October is when we expect to break ground, start the overburden activity. So that's about the first mine, KBP, and Tasra is the KTMPL, the sale mine is going a little slower than expected because of sales washery tie-up and their washery capacity being completely utilized. But in Q2 of this year, there's going to be again a significant increase in quantity that they're going to ask from us. We have anyway, the mining activity is going on, but we are unable to give, we could only give a small amount to sale in Q1, through which we were only able to book around 14 crores of revenue. But Q2, we expect to do good numbers. We already started dispatching close to 1,000 metric tons per day, and this is expected to ramp up to 4,000 to 5,000 metric tons per day. So this is on the MDO front. And business development, as Ramaya sir had said, I would just like to add a few points with regards to the BharatNet mid-mile connectivity project that we have recently quoted for in a consortium with reputed optical fiber cable laying company in the country, and we have participated across all the packages successfully, all the 16 packages that any company could bid for. So the results are expected to be out anywhere before the middle of next month. So that's one development, and we have some O&M. Overseas O&M has increased compared to last year Q1 to this year's Q1. Overseas O&M has increased by close to 27% revenue, and this trend is expected to continue for the next 4 to 5 years. We are seeing a good traction this year. We are also exploring new territories, like we have bid for a couple of projects in Jordan. We have added new clients in Qatar and in Saudi Arabia as well. And we see this trend to continue. A lot of overseas O&M business is going to come up in the next 2 to 3 years. So that's the update from my side. We can go ahead with the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Sorry. Hello?
The first question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Yeah, good afternoon, sir. Is it possible to give color on EBITDA margin segment-wise, say in civil works in the power segment, in the mining segment separately, railway segment separately? Is it possible to give color of where the EBITDA margins you see is relatively higher, lower?
Yes, sir. Sir, if you take the business, erection business is concerned, we are getting EBITDA of around 6%. In industrial construction erection business is concerned, the volume of turnover is very low, so we are getting at approximately around 1% of the EBITDA. And in civil power is concerned, we are getting around 12% average EBITDA margin.
Okay.
And the infrastructure side, that includes including the sand mining and water division altogether around 17% margin we are getting. In transmission and distribution, we are getting around 0.5% EBITDA. In international operations, because Q1 around 20% of the margins we are getting.
Okay.
And in SPU, in water division, we are generating around 19%. Weighted average of all 2 years, we are around roughly 10 to 11% we are getting in the infrastructure business is concerned. And mining, as of now, only Tasra is operating, so 13% we earned EBITDA margin during Q1. So weighted average around 12.2% EBITDA we generate.
That is helpful. So if I look at these numbers, relatively your water division and your civil in the power is on the higher side, while erection, industrial construction is on the lower side, and even power T&D is on the lower side. Am I right?
Yes. Because some of the projects
O&M domestic and overseas, water, civil, both power and non-power these are on the higher side. And as you rightly said, the other businesses, the industrial construction and non-power construction is a little on the lower side.
Understood. Coming to the second question, which is opportunity in the power side. So you mentioned about 17 gigawatts by NTPC and a lot of projects by Adani's also. So what NTPC is telling is they have a total construction cost of around 10 crores per megawatt. So within that 10 crores, what proportion would be civil opportunity?
Of course, NTPC price is 10 crores is with IDC. Maybe we have to take about 2 crores or 1.5 crores of that. That will not be part of an opportunity. That will be interest in construction. Therefore, 8 to 8.5 crores we can take as the base price with whatever is the current prices. Therefore, normally with full material content and engineering and supply, and then the structural portion and the material content, the civil and structural portion will be around 20%. You can say roughly around 2 crores you can take.
Okay. 20% of 8 crores. Okay.
Yeah, 20-25% we can take. Because of course, when they contracted to BHL, we have to see the scope clarity with material or without material. Those things will come separately.
Okay. Since you mentioned BHL, my final question is, we are hearing that right now in this thermal side, the vendor is only limited to BHEL. So do you think all this 70 gigawatt by NTPC plus another 10 to 15 by Adani Power, all these capacities will have timely delivery of equipment by only one vendor? What is your opinion there? Is the government doing anything to expand the vendor base?
Yeah, that is a very important question. We have to ask ourselves also on this. See, BHL, I am ex-BHL man. BHL have got a basic shop capacity of 15,000 megawatts. That is for sure. And the present, if you look at the present balance of the order book, they are adding to be done 80,000 megawatts in the next 7-8 years. That is, on paper it is doable. But BHL has got other things, whatever is there, working capital, so many issues, and they can be there because their margins have come down a little bit. Or little bit means there are other issues with BHL. But anyway, they are delivering. But what I can say is that government is also encouraging. For example, we have received some inquiries from Thermax also recently for the DVC Raghunathpur 2 into 660 megawatt. Of course, they are into the boiler package. Actually, DVC has called a tender for the boiler. That is the boiler and turbine island. That means it covers up the entire plant. Therefore, this idea can come up also for NTPC also. They may change the strategy. In fact, NTPC has been discussing with the players like us also and other BOP players. How can we get into the BOP business also? But as I said, it is doable for BHL if they can line up their financing and other issues a little bit better. Otherwise, they have got the shop capacity, that I can tell you. And if L&T also had established capacities, and they were doing pretty well, and even ongoing jobs are going on in Buxar and other places. But what has happened is that, the new CEO Subramanian has come up, he has taken a decision, little bit of go slow down, whatever is there. But now government will definitely push for them. Ministry of Power will be pushing for them, like what they have done for Thermax also. Perhaps L&T will also come on line. And GE is another option, but GE has got a turbine island, which is GE, and boiler also they are having. But that is a different thing. I don't want to comment on that much at this stage, because they have got a EDF takeover of the GE turbine portion, and that if they come into play, then they can also play a role in the one aspect of the turbine power plant.
Understood, sir. So from what I can hear is that on paper BHEL has the capacity, but they have to sort out some execution challenges and financial challenges, while government will definitely have to push other players like GE, L&T and all to make sure that the timely deliveries happen to achieve this target. Otherwise, there will be delays definitely.
Thermax can play a role, because I can tell you honestly, they had invested substantially in their plants in Pune, and we were also discussing with them earlier a couple of years back. But afterwards, when the slowdown happened, they also didn't take the call. But now they have been, perhaps, these are all prodding has come from the Minister of Power. I think the same thing they may be doing with L&T also. They'll bring these new players, and Thermax can deliver also. We have done some work with Thermax also. They have got the capacity to do that.
So thank you so much. I'll join back in the queue.
Yeah.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Riya Mehta from Equitas Investment Consultancy. Please go ahead.
Thank you so much for the opportunity. My question is more in terms of macro outlook. So recently there was a Supreme Court judgment which said that states can levy mine tax retrospectively from 2005. So will this lead to any impact for our MDO existing business or future business?
Riya, can you repeat your question?
Sure. So recently there was a Supreme Court judgment which just said that the mines, the state government had the power to levy tax for the miners from retrospectively from 2005. So will this lead to any change in existing commitments for our both the MDO projects?
Ma'am, MDO, we are not the owners of the MDO. We are only the mining excavators. So any of GST the taxes are applicable on my revenue. So we are not the owners of MDO.
So that I understand. But will they reduce the offtake because their payment cycle, or they have to pay for almost last 17 years? So have you seen any?
They are not gonna. This is not going to impact the offtake at all. If it's going to impact the offtake, there are clauses that protect our offtake, perhaps in the contract. Rohit here, So it's not going to impact the offtake.
Okay. That's good to hear. Also, on the side of, you were talking that for Adani Mundra project for FGD will be starting. So could you highlight more details on that?
Yeah, I think tendering is in process. We are working on that, and perhaps it will be finalized another within 2 months, and we are quite optimistic on that.
So if that comes across for this year, we would have incremental 150 crores?
Yeah, we have to see that. That is also possibilities there, but as on today, we are budgeting about, because ordering is going on a big space for the Udupi project, and also in the other 2 into 660 megawatt in Mundra also. About 600 crores of orders are in the, that means supply chain side is being tied up. Therefore, we are confident about 300 to 350 crores revenue should be possible in this year. And work have already started in Udupi.
So 300 to 350 crores for entire Adani projects, right?
Yeah. At this stage.
Got it. I think thank you for the questions and the answers.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sanjay Satyapati from Ampersand Capital. Please go ahead.
Yeah, thanks a lot, sir, for the opportunity. And so just wanted to confirm a couple of things. We have noticed that your sales growth has finally started getting a little better now with some 16% kind of growth this year. And your guidance is almost like a 30% growth for the rest of the year, which looks pretty high compared to what has been happening in the same period. So can you just tell us like what could be the factors that will drive this kind of better growth?
Yeah. See, on the power sector, the opportunity size, I told you 15 to 20,000 crores. It will happen in the next 2 years. Whatever the ordering has to be done by BHL for the supply chain, that they have to complete it. Adani have to complete their this one. Now, NTPC, as I told you, 17,000 megawatts, they have to expect the order in this year, and something can come on that. Therefore, on the power sector and the O&M side, as I told you, almost 600 crores have been booked, and there are many opportunities. We are working with many new players also. GMDC, 240 crores, it is also expected. Then there is another order from with the Vedanta Group we are discussing for 91 megawatt, and then Punky 1 into 660 megawatt O&M order we are discussing, and then Bhavnagar 2 into 250 megawatt the lignite-fed boiler with the GMDC, that also we are discussing it. For we are quite bullish on the O&M side in the current year also, mainly in the power sector, and some of the non-power side also it is possible. Therefore, on the railways is another sector, about 5,000 crores of opportunities we are tracking it. And as we know, we are doing about 12 to 14 jobs, including the metros, and then railway doubling, traction doubling, all those things. And now we are well versed with the system, and the payment mechanism is good. And our execution system also is fully established with an organization and all. Therefore, we can be more aggressive on the railway jobs also. Then, of course, the new opportunities will come up in the industrial side and the steel plant side, mining, and then mine side facilities. For example, Coal India is planning 62,000 crores of investment for the mechanization of the mine side. All those things will also come up. Therefore, the overall opportunity, what we are tracking as I said, 75,000 crores, that is being continuously followed. And the good thing can be the second quarter end and third quarter end and fourth quarter end should many of these things should happen the way we have planned.
Thanks a lot for the detail. I'm just what I'm trying to say is that you already had big back order book for last several quarters, but still the execution pace was kind of moderating. But now you are sounding a lot more confident. Is there anything that has changed? Because we're talking about execution right now rather than order inflow.
I think the execution phase, if you see 3,600 to 4,200 crores and now 5,200 crores, that is doable. I think the first quarter, whatever is the revenue of nearly 1,000 crores, whatever has been achieved. And look at the second, third, and second quarter we can take because of the monsoon and other aspects. But third and fourth are typically the growth quarters and all. Therefore, that should be still achievable. And then the orders which are poured into the first quarter, first 2 quarters, whatever now 17,746 crores are there, that will come for some conversion. And then the Adani about 300 crores also will come for conversion. And then any orders which comes in the third quarter also, some more possibility of conversion is there. But as far as the capability of the organization strength and the various other inputs required and all, we are already having those inputs in place in terms of manpower, resources, construction equipment, and then the people are there in their so that is not a challenge.
Understood. Sir, if I can just ask that when do you, will your tax rate come down to 25-26% this year?
Yeah, this year it will come down, sir, because last year due to income tax, additional income offered to the income tax due to sales and also the additional cost incurred. So now this year will come to the normal, maybe around 26 to 27% will beginning of this year. Yeah.
Okay. And so this contribution of MDO, which you were saying that will accelerate, but you were saying that the benefit of that in terms of margin expansion, it is not likely this year. It is likely from next year onwards only. Is that correct?
Yeah, this is big development phase. So initial ramp up production has to happen. It may take another 2 years minimum to get the ramp up, and then our washery will also start to adding to this washery revenue. So then at that point of time, we will get the marginal improvement will be there in next 2 years later. 26, 27 year onwards, we may expect margin improvement in MDO. Until that time, we will be around 15 to 16%.
Got it. Thank you, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Anupam Gupta from IIFL Securities Limited. Please go ahead.
Yeah. Afternoon, sir. So first question is on the MDO. So you said the CCL project is seeing 2 months of delay. So and apart from this position of land, are there any other clearances which are left now to start the project in end September, or that is now realistically certain?
Good afternoon, Anupam ji. So this was the last step for us to start the mining activity, and we just have to perhaps file an online application now, which we are doing either tomorrow or day after tomorrow. And once we get a clearance from it's going to take around a week, and after which we can officially start the tree felling activity. Tree felling is done before we start removing overburden.
Okay. So one should expect third quarter to have certain revenues from the CCL project, right? Or is that the right assumption?
No, around, end of third quarter, beginning of fourth quarter, because we'll first have to touch 45 to 50 meters of strike where the seam strikes. Until that point, we have to keep doing overburden excavation. Felling of trees is going to take 2 months, and after 2 months is all OB until 45 to 50 meters, and after overburden is when we'll touch the seam.
Okay. And secondly, on the sale project, so the washery issue was there in the fourth quarter also, and I think first quarter it actually worsened in terms of revenue delivery which you had. So what is the status on the washery tie-up at this point of time? And is it being done in a way that till your washery comes in, the volumes remain guaranteed at least once it starts?
No, Q4 of 24 was okay. They were able to take decent capacity from us. But Q1 of 25 has worsened. It's primarily because of sales washing capacity being full. One of their line is not working and the other line is full, and as and when they need. So we had a discussion with them and we signed a minutes of meeting, and starting 1st August onwards, they have started to take 1,000 metric tons per day. It has already touched 1,500. For this week, we already are starting to give 2,000 metric tons per day. So this is again, the ramp up is going to happen slowly. We are in discussion with SAIL, so they are going to right now. This is what it's looking like. They'll start to take 80,000 to 1 lakh per month in a slowly upward fashion from 60,000 to 1 lakh, and after 1 lakh, again we are in discussions with them to increase it to 1 lakh 50 and 2 lakhs per month.
Okay, understand. So when you said 25 to 30% growth for this year, that included how much of mining revenues for this year?
In fact, we projected 250 crore from Tasra and 50 crore from KBP. So maybe 250 we may touch, maybe around 100 crore we may touch. Because of the offtake is not there. So apart from that, we are as per our guidelines, we are able to achieve.
So we expect we projected around 300 Anupam from both the mines together, 250 and 50, and we expect to do somewhere, because KBP, even if we target Q4, we can achieve that 35 to 40 crores once we have production starting from end of Q3 and beginning of Q4 onwards. And KTMPL, depending on this ramp up, because our washery, by the way, I just wanted to tell you that we have started construction of our washery. Soil testing is going on. So this is, I think it's only a temporary, a momentary issue right now. But I think SAIL has given us a word that they're gonna clear up some washing capacity for us. But because of predominantly Q1, we couldn't do anything. We could only do 14 crores. We expect there to be a dip in revenue in KTMPL, the SAIL mine, to the extent of 100 crores. So we projected 250. We'll do around 150 to 170 based on this ramp-up schedule that we are talking with SAIL.
Understand. Okay. And one last question on your order inflows. So the overall picture obviously is pretty clear, but let's say BHEL, when do you see the tendering actually starting and you being able to book some orders from BHEL, given that they already have such a large order book?
You see, they have started the tendering for Lara 1600 megawatts, and then Talcher, we have already taken some jobs there, and then they have to take up the work on, because all these things are 36 to 42 month schedule. They have to finish this ordering within the first year, the extra first year to say 15 months. Then Yamunanagar also has to come up, and then this Kodarma has come up only recently. That will take up maybe another 5 to 6 months. Therefore, now is the time for BHEL to expedite the order booking also, because maybe what happens in these mechanical orders, first they have to focus on the civil engineering, and they may be working on the engineering aspects. When the engineering is finalized, then the civil will come up, and then the mechanical will come up. That is how the sequence is there. For we expect in the third and fourth quarter, things should move pretty faster. And of course, most of this order booking, they have to complete in the next 12 to 15 months.
Okay. Understood. Just one last question coming back to mining I had. So let's say this year, obviously, there is a mess because of SAIL not taking the offtake, but does it impact next year run rate which you can deliver or what they can take?
No, Anupam. I don't foresee any impact of this next year. No, there's not going to be a lot of cascading effect, because we are going to keep pushing them to take more capacity, at least the contracted capacity, until we reach the PRC, peak rated capacity. So I don't foresee any cascading issues of this to next year.
Sure. Okay. And just one last request: the order which you disclose in your presentation, it would help if you do it at the end of quarter rather than mid of the quarter, because then it becomes very difficult to compare. So let's give a number which is end of June, end of September, end of December, rather than giving a 12th August number, because it doesn't help comparing at all.
Yeah, we are giving breakup of both the versions, so including, we'll follow the same.
I think Q1, Q2, Q3, this one is there.
June already I have given. Additionally, I have given 12th August date.
Okay, fine. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Thank you. Hi sir, I'm sorry if the question is repetitive. So what is the order inflow you're guiding for FY'25, like in terms of rupees crores?
It's 11,000 crore we are projecting.
So if I can get any segment-wise in this number, sir?
Yeah, segment-wise, perhaps, the substantial orders will come. I think the O&M side will as on today, another 1,500 crores of opportunities are under tracking. Then the ETC business and the civil business, that will be the next lineup for this one. And of course, the other bigger orders should be expected based on how the things happen, as Rohit has explained on the BharatNet activity, because there is a lot of opportunity there, and the availability of the so many territories and areas which can be being tendered in such a way that we should be able to get something there. That's something reasonably we should get it. And then the usual non-power sector, whatever we are pulling out in the mining side, metal side, mineral side, and then some of the water system projects also should be.
Understood, sir. So also you had mentioned the bidding pipeline is of around 75,000 crores, which is mainly in power sector and O&M. So if you could break down the bidding pipeline in power sector, O&M, and mining, what is the exact pipeline?
I think those numbers are there. I think substantially about 45,000 crores in the infrastructure and railways. and then the other segments will come on the ETC business about 12 to 15,000 crores, and then the non-power sector and the O&M side.
Water is
and then water also is there.
So what in power, sir? In power, how much?
Power, you can the opportunities have been 12 to 15,000 crores.
This includes O&M as well, right? Power O&M.
O&M is separate. I am talking about the civil and ETC business.
Direction. Understood.
Yeah.
What is the O&M, sir, for power?
Pardon?
Opportunity. Power opportunity in power O&M, sir.
O&M about 1,500 crores.
1,500 domestic, and including overseas, it will be around 2,000 crores, sir. 2,000 to 2,200 crores.
Understood. Thank you, sir. That's it.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Ms. Natasha Jain from Nirmal Bang Equities for closing comments.
Thank you. I would request the management to give any closing comments if they have.
Yeah, one development perhaps we have to update. I think we have explained all the background and all. One is the green hydrogen initiative. We are also taking interest. National Green Hydrogen Policy of 5 million tons by end of this decade. It calls for an investment of nearly 8 lakh crores, both on the hardware side and then on the development side of the projects and all. Already a lot of tenders are coming in terms of green hydrogen capacity enhancement of each plant capacity of 10,000 tons per annum to say 30, 40, 50,000 tons. And in this regard, Rohit and myself, we had made a visit to Portugal and Spain to see the technology available in Europe, and we are discussing with some of the technology players, and we have seen some working fronts also. And that is one of the areas perhaps the organization will also focus in future. Yeah, this will also align with our mechanical construction business and associated civil works also, because the contract structure and working is similar as far as the execution is concerned. Of course, the other aspect is to work on the development projects and wherever commonly applicable. For example, this urban transport and rural transport, where we can power up the buses and all of the road transport corporation, and then cement plants, there can be scope for injecting the green hydrogen. Of course, these are all the things we are examining it. It's a early stage, but the plants which are coming on as an investment basis and all for the petrochemicals, fertilizers, a lot of plants are coming up, and then we are working on that. And this is more and above the other developments what we explained on the power, non-power, and then MDO, etc.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.
Thanks, Natasha.